Action.
Alright, hi guys. My article was a study on the fluctuations of currency impact on gold price determination in selected countries.
Oh, and make sure that when you guys do the presentations, you print out the presentation in black and white
Got it.
for me, one slide per page,
Got it.
and then give it to me before you present.
Okay.
You
I'll
may-
print
and,
that out.
and do yours too, Esteban too, and then that way I can look at it and give you comments, so we can go back and forth.
Just a little intro. Gold
And
price.
speak up, please.
Gold is one of the 5 basic asset classes, and tracking the gold price can give insight into the current conditions of the national and global economy. And there's several different things that factor into gold price, and one of the primary factors being inspected here is
Hold on
inflation.
a second. You don't want to do black on dark. You want to do white on, yeah. So you can do that later.
Okay.
So
Alright. Summary of the article.
can you go back?
Yeah.
And then go through that again, please.
I'll go through this again?
Yeah.
Okay, so gold is one of the 5 basic asset classes, and tracking gold can give an insight to what's currently going on in our economy, in the world. And there's several different things that factor into gold price. The thing that they're looking into here is inflation in this paper. Just a quick summary, it looks at the influence of inflation and currencies on gold prices of Australia, Britain, Canada, Hong Kong, Japan, Korea, New Zealand, Singapore, USA, and Mexico. It shows how inflation has a direct influence on gold price in gold imported countries, and the data ranges from 2005 to 2015. Just a little bit of data. They applied Kendall's Tau-B correlation coefficient, a bivariate between a country's gold price and the international price, and it shows that Hong Kong, Korea, and Mexico all have a negative correlation with gold. So, and then the latter all have a positive correlation with gold. So as the international price goes up, the Hong Kong, Korea, and Mexico price go down, and vice versa for the others. And the analysis of weight estimation result depicts that all the countries besides Singapore their gold prices are influenced by inflation. Continued, this graph shows the inflation influence on gold prices of selected countries, and it shows that as the inflation goes down, all the countries' gold prices drop as well. Some methodology used. Kendall's Tau-B, as I mentioned earlier, it's used to measure the degree of correspondence between set of rankings where the measures are not equidistant. Also the bivariate correlation, which I also mentioned, measures the relationship between 2 variables, specifically the strength of the relationship. Moving on, the Granger casualty test, which is a statistical hypothesis for determining whether one time series is useful in forecasting another. Moving on, augmented Dickey-Fuller test, a test for the unit and time series sample. The Jock-Beta test, a test statistic for testing whether a series is normally distributed. Vector autoaggression, and economic metric model used to capture the linear interdependencies among multiple time series. And then the significant variables in the study were gold prices and inflation rates. The results they found were that Hong Kong, Korea, and Mexico currencies have a strongly negative correlation with gold prices, and all the countries' currencies are significantly influencing the gold prices. And Singapore is the only country not having influence on its gold currency. Singapore currency is not having an influence on its gold price. British gold price is expected to move up due to currency fluctuations, and all selected countries' gold prices are expected to go down in the near future, excluding Britain. Japanese gold price will fall more than other countries' gold prices, and the least affected country gold price will be New Zealand. And they also found that countries with the top imported gold have the highest fluctuations in the gold prices. And my recommendations would be that investors in Britain should invest in gold because the regression equation indicates gold prices are rising. Top imported countries with the highest currency influence on gold price. So in these countries, other assets should be invested in to maximize portfolio returns. The international gold price mainly depends on the global economy future movement. So the top global to import gold due to causing it to the drop of prices. So if you import more gold, it leads to prices in gold dropping. And then top imported gold countries should reduce import, as I said. And then investing in gold gives returns when the economy is bad. We know this. Like, for example, when there's fear, people invest in gold and it has a higher return. But if the global economic welfare increases, it's not as smart an idea to invest in gold. And if inflation drops, investors should reduce investment in gold prices to maximize portfolio profits. And that's it.
You may want to add in your recommendations, you know, the trades. So, you know, if you can, I would say trades and investment, okay, and or a portfolio play. So, you know, what countries would you invest in gold mining companies? Okay, and then the other would be that based on your forecasts of currency movements, what indexes you could also trade depending on your forecast of gold price movements. So if you can find, let's say in some of these countries, you're forecasting gold prices to either go up or down. If you're forecasting the gold prices to go up, you can find gold price indexes, spot price indexes for those countries. And you can buy the forwards, buy the futures, buy the calls on the futures, and write the puts on the futures. For the other countries that you're forecasting gold prices to go down, you can find the spot gold price indexes, and you can write the forwards, write the futures, write the calls on the futures, and buy the puts on the futures. So use the trades that you learned in your memo to make those trade recommendations at the end, and try to get as specific as possible as you can on those trade recommendations.
Thank you.
Okay, so take it to the next level.
Okay.
Okay, and then that'll be a really good recommendation. Okay, or even in the last recommendation is not only the trade recommendations but the portfolio recommendations. Okay, where you could be, if you're anticipating, you know, the price of gold to be going up in those countries, that the direct beneficiaries will be the gold companies. And you can build a portfolio of gold companies within those countries, and build a portfolio, and then not only buy the stocks, you know, in those companies, but also buy the call options and write the put options, and also buy on margin. So you can then within those countries, you can identify the companies that you want to put together a portfolio to gain exposure to the rising gold prices.
Thank you.
Okay, so if you can do that, that would be amazing.
Yeah, I'll add that in. Thank you.
Okay, you're welcome.
Appreciate it. Do you want me to still print out the slides and give them to you next class? Or?
Yeah,
Okay.
yeah. So go through iterations and stuff like that. But what I would do now is to take your base presentation, do another article, and synthesize the two. And then take another one, synthesize the 3, the 4, and then the 5, and the last presentation. You could even jump, you know, to including and synthesizing 3 instead of 2.
Got it.
And then try to drive, give me one more presentation, and then give me the final presentation with all 5.
Got it.
Okay.
Thank
Nice
you.
job. Awesome.
Just have
Go for it.
Well, actually, my computer can. I'll just send it over.
Even Isaiah's not here, is he?
I think you might be sick. I'm not sure.
Edlin? Eden? Aaron?
Here.
Joe?
Here.
Aaron, did you finish this exam?
I think there's one question left.
Okay, cool. Why don't you finish it then? And then you're gonna give me the deliverable too?
Yeah.
Okay. And you guys should be pulling together your deliverable 2 for next Thursday. So, you know, the memos, the memo on the article, you know, your draft paper, you know, and then we'll do the problems and the chapter presentations on Tuesday, okay? And then I would put it all together for a, you know, first draft deliverable 2 submission to me for Thursday so I can take a look at it,
Okay.
okay? And then we should try to get that thing done.
And you want all 5 memos, isn't that right?
Yeah, I want all 5 now. Okay. And then I think I listed everything. Did I list everything on the board?
Yeah.
Yeah. Does anybody have anything they wanted to give me or show me?
So I started to put together the research paper.
Excuse me?
I started to put together the research paper.
Yeah.
I just wanted to see.
Okay,
if
awesome.
it was okay.
Will you do me a favor and present that today so everybody can see what it looks like?
Sure.
Yeah, I want them to see what it looks like.
Okay.
Because we got to get them over the procrastination hump.
Okay.
Okay.
Yeah, this is just like the outline, so I could.
Yeah,
just fill
that's
everything
perfect. That's exactly what I'm looking for.
in. Sure.
Okay. And then you got the reference page
Yeah.
and
I have
the
everything
appendix.
down there. I just need to put stuff
Yep.
forward.
Perfect. Awesome.
Yeah.
Yeah, make sure you center those things.
Yeah, I think because since I'm adding all the stuff in right now. It's just
Yeah, yeah. You could just do a page break and then center them, and then later put page breaks, and then put everything. I would separate them. Have a cover page for all those in the appendix.
Yeah.
Alrighty. So,
And action.
alright, so I am doing mine over a very general topic, marketing strategy, so it won't be going so much into like how it will impact stocks and such, but I will be going over the theory of planned behavior, which is connected to the theory of reasoned behavior, and I'll dig into that very soon. So my title is going to be Developmental Behaviors and the Effect on Technology Consumption in Developmental Stages of Children. And what is misconceived today? Technology is a need. Why is that a misconception? Because a lot of parents like to either tell their children this is not necessary, using a cell phone is not needed until this specific age, people shouldn't even be looking at screens as often, but the truth is, it's become so important to this modern generation that in order for a child to grow up today, they have to be able to use some sort of technology of some sort to some degree. So it just goes into how it's not just a want, and parental limitation can actually harm business, which is not a true fact at all. How parents try to mediate their kids, limiting their consumption, and that could negatively affect how often they're buying like Apple products. It's also not true, and now it's been why. So, from the article that I was using, they were digging into the theory of planned behavior, which is defined as the attitude towards the behavior, injunctive norms related to the behavior, and self-efficacy, which is perceived behavior control. How much do you think you're in control of your own actions to perform the behavior to begin with? And one example of this piece of data was that in the US, 70% of children ages 13 to 17 have access to a smartphone of their own. And this was taken by a online survey sent out in 2015 by the Pew Research Center. Children ages 8 to 12 spend at least 48 minutes a day on smartphones. This is also more generalized to touchscreen devices. And the amount of time spent on smartphones increases to 2 hours and 42 minutes when they reach adolescence, which is just the farther along their developmental stages between 8 to 14. Some of the methodology and ethics that they used in their data gathering collection, they were taking online surveys directed towards parents over the age of 30 with at least one kid of their own that uses technology. And under the people who followed under those qualifications and direct interviews with parents that were according to the research or Ashton research or the other independent researchers that they used was very intense. And these were all examples of what types of data they were collecting, who they were collecting it from, and what kind of results this could possibly be having towards technology consumption. At the bottom is just a connection to the actual piece of data that is going to be gone over. 509 individuals who accessed the survey, 60% of those individuals, about 304, actually performed the survey and were eligible to participate. And there were a total of 303 participants. So just to make you aware. So these were the variables that were taken into account. Parental supervision. Mediation is governed by how in control that individual who's consuming the product has. And parental supervision limits the amount of control that child has when using a device by either restraining them or simply allowing them to use as much of the cell phone as they possibly want. Calculated mediation, so how mediated is their technology consumption? That was all to the mindset of the parent, and that has to do with the theory of planned behavior, which I'll go into a little bit later, and the psychological factors that went into the parent's intentions to control mediation. Those are the variables. So, in the article, these were the results. So if you look to the right side, according to the 303 individuals that participated, 90 of them were male, 211 were female. The other are just people who selected other. And the idea was that which type of mediation would actually permit or, well, result in positive technological consumption, which was active mediation, in which parents were actually talking with their kids about how good is technology and how much technology is good at a certain amount of time. And restrictive mediation was setting rules and regulations that stopped kids from being able to use technology with little to no explanation whatsoever. Now, active mediation over the course of this entire, I wouldn't say survey, over the course of the data, active mediation was much more appealing, especially to the parents, because they felt like they were positively influencing their kid to use technology wisely on their own. While restrictive mediation, kids will end up using technology unwisely and could later on lead to addiction or unwanted, inappropriate content being exposed to them. And another piece of information that I guess really wanted to stick with you was 69.6% of the females, 72% were Caucasian white. These were just like little highlights of the data that really stuck out to me. Now, here we see the other side of the coin, the flip side of the coin of active versus restrictive mediation. And noting that each and every single one of these data fixtures are under a 5-point scale, 1 to 5, the standard deviation was about 0.5, and for the results being what they are, active mediation seemed to much more appeal to the attitude towards the behavior, which is very important, especially when trying to calculate how much mediation is good and how mediation should be promoted in the future. Then there was the response the parents had and the intention behind the parents' intentions. So self-efficacy, which was how much control a person had over their own behavior. The descriptive norm was well as injunctive norm with reference to one's own child and spouse and friends were significant predictors of mediation intentions. So how much they were actually communicating good active mediation determined whether or not the response to the mediation was positive or negative. And by understanding this attitude behind the intention, behind the behavior, we're able to guide whether or not technology consumption is a good thing to the kid or a bad thing to the kid. And this will affect the end result. So the attitude toward the behavior related to the behavior to reform the behavior. These are some studies that actually had a much larger effect towards the intentions. So whatever you get from this data, necessarily. And this was the final recommendation. So although there wasn't a lot of numbers behind it, the recommendation was simple. Considering that technology consumption is more desirable when parents feel like they're in control, by promoting a type of software and like an investable software to whatever company is interested as a like child only mode, that product would seem more desirable to the parents and would be more likely to be kept and sold to specifically children as the target market. Yeah. So any questions? I got answers. Towards the data, towards anything you guys want to see again, anything you guys want to be clear. Professor?
Yeah, I have some comments. There's too much data in the slides.
Yeah.
You got too much information. It's really confusing. So, and then what you need to do is your second slide. What you should do is before you do the presentation, from the first slide, like the very first slide, that one, before you even go through the presentation, give us the elevator pitch.
Based on our research.
Yeah, you do just an introduction based on the research that we conducted. This is what we were focusing on. These were the results, of the research, and this is my recommendation. This is our recommendation
So
on
that
how we
get
could
a clear
use it.
idea as I go along with the
Yeah, because what you do is you went right into the presentation,
yeah.
and I was just asking questions. It's like, when are we going to make the money? How do we make the money? How do we use this information through the whole thing? And it was driving me crazy, like most people,
Yeah.
right? Your audience is going to be between basically 28 and 58 years old, right? And they're going to be professionals in the industry. They're going to be looking for opportunities for investment. You got to tell them right off the bat, why are you wasting my time doing this stuff? Are you wasting my time, or is this valuable time? Does that make sense?
Yes.
Yeah, if the presentation goes for 10, 20 minutes, you're wasting my time. If you can be succinct and get to the point, walk us through the presentation in 5 to 8 minutes with basically another 2 minutes of Q&A, you're not wasting my time. It's extremely valuable time. Do you understand?
Yeah.
Yeah. So when you go through the presentation, the next, and I should right off the bat, you have developmental behavior effects on technology consumption. It should be software opportunities related to developmental behaviors and technology consumption. So right off the bat, the title tells me exactly what it is and what we're going to do. The title is the first thing we're going to look at. Take out micro, Econ 100, take my name off that. You can still use the date, but it's about you. It's about you, okay? I want people, when they look at this stuff, to think that you're a graduate student and that you've worked for a company, not doing this in a classroom. Do you get it?
Yes.
Yeah, okay. So the next slide should be your pitch. Why is it important, and why are you taking me through this? Okay, how are we going to make money doing this stuff? Or how are we going to use this information to make policy recommendations? Or how are we going to use this information and these products to make social change? If you can develop an application that can be scaled and distributed very rapidly into the marketplace, and if you understand the size of the market and the rate in which you can scale the adoption and how much you can charge for this thing and show me the economics, that's going to be amazing. That would be amazing. And if you could tell me that right off the bat, that would even be more amazing. because you're telling me what I want right up front. And then the rest of the presentation is basically just supporting your projections. Okay? So then you get in. So really the key to this whole thing is the rate of adoption by children during their developmental stages. Right? During that time period between, what is it, like 2 and 10? And 10 and 14?
Considered three after that for technology consumption.
Yeah, so, but there's gotta be some kind of rate of adoption, right, that then kids aren't
There are
using
some, yeah.
2 hours of, smartphone use when they're 2 years old. Right, they're probably not using it 2 hours, right? But for each age or for each, age cohort, there's probably a level of adoption that increases, and then you just don't have enough time during the day to be on your phone the whole time, right? So there's gonna be a peak consumption by age at some point in time, correct?
Yes.
If you know the demographics, if you know the size of the market, and you can find this from the census, you can find the number of kids in those age groups. So you could be able to, for each age group, you can calculate the number of kids and the amount of consumption on a national basis, right?
Yes.
Okay, so that'll give you an indication of the size of the market, and I bet it's huge, right?
It really is.
The other is it's not, the kids aren't going to be buying your product. It's going to be the parents that are buying your product. So one is not only the size of the market from the demographics by age cohort, but the other is the size of the market by households, by number of kids. Because you really don't care about households that don't have kids. You only care about households that have kids at certain ages, age groups, right? So you're going to eliminate the number of households that don't have kids. And you're only going to be focusing on households that have kids. So that's another way to measure the market. And let's say the number of households that have kids in the United States. How many people are in the United States? What's the population of the United States? Like 300 million?
340 million.
Something like that. Let's say it's 300 million. And let's say there's 2 people per household. So that's what, like 150 million people right there. And then let's say that number of households that actually have kids in the households, maybe let's say 75 million.
That works.
So your potential market right off the bat is 75 million, right? And let's say you can actually sell this product to half of them. So basically your potential market size is what? Like almost 40 million people,
30 seconds.
right? And let's say you sell this product for $1, that's $40 million. Now you got my interest, right? And if maybe you sell it for a dollar, $10 a year. Now you're talking about what? 400 million? Now you got my interest. And not only is that 400 million, that's 400 million a year, because it's a subscription basis. Right?
Yep.
So 400 million a year times 10 years, that's $4 billion. So your potential EBITDA, your potential cash flows could be $4 billion in 10 years that you brought in. You slap a 10 multiple on that $4 billion, you're looking at potentially a $40 billion market cap company. Do you have my interest?
I do.
Yeah, you do. Do you think people right down the street on Sand Hill Road think like that?
The answer is definitely yes.
The answer is definitely yes. So you need to be thinking like that. And now you can build your case. Now you can. Now you have to figure out the strategy to basically get to parents to be able to get them to buy this app.
And this is where I should be using like the supporting articles and such.
Yeah, the articles are gonna support your adoption cycle. And you're gonna lay out the economics that I just presented to you. And then you're gonna use the research to support your projections of adoption by the parents for their kids. Then the question will be, what is the product attributes? What's the attributes of the app? What are the product attributes? What should the app do?
It won't necessarily be an application, but more or less a mode sold directly to the, what's it called?
What's a mode?
You know how there is something called safety mode or child, like, what's it called?
Child lock?
It's kind of like child lock, but for a tablet, for, let's just say.
Yeah, but isn't that a software application?
That's exactly what it is.
Or are you selling it to
But
Google?
Probably to Google, to Apple, to,
Okay, that would be an enterprise level solution. That's called enterprise level. Then you could sell it as an app or a
so
software
would you
app.
recommend that it would be an app or like?
I envision it as an app on the phone that the kid is being given, and that there are certain parental. What did you say? Parental.
It'd be a number of parental locks while also mixing in with educational applications that are just.
Yeah. So
immediately
basically,
displayed on
the app is the interface
Is
that the parents can basically, you know,
interact with as well.
you turn things on basically in the setup phase, and then you can go to child mode, and then you give it to the kid.
Because the thing is,
So it
correct,
filters, has controls, has you know.
from my understanding, the Apple tablet itself does not actually have a child mode on it. So there are other applications that have safety locks on them, or have a number of like applications within the application itself that are educational and contoured directly towards whatever developmental stage your child's going through. I thought it would be better to sell it at that enterprise level directly to the companies that have the ability to integrate that service into their technology as interactive as possible with the already existing technologies in the household. Like,
I think you do both.
that would be,
You have a retail product, and then you have an enterprise level product.
that would be taking it a little bit farther.
Yeah, I would sell the enterprise level. I mean, I would do enterprise level, but that's going to be a harder sell. The retail market is going to be easier.
So where would you suggest I would begin? If I were
Use
to
social
actually-
media.
Using social media?
Yep. Facebook, LinkedIn, you know, other cheap forms of social media outreach to gain people attention.
Okay.
Twitter, Facebook, LinkedIn, probably Twitter, Facebook, what's the other one? Snapchat, you know, other social media to be able to promote your product and to be able to sell it via those platforms, so that people can basically click on, you know, get their interest, be able to download the app, and be able to charge to their Apple account, you know, $1 a month. And then be able to turn the child mode on and off when they give it to their kid, or they buy a phone and download the app and give the kid the phone. And then it regulates the amount of time. It promotes education. It filters. It does everything. So it could be on the parent's phone, or it can be on the child's phone. And then the app can actually even morph as the child ages, and the app and the attributes change as the child develops, because you already understand all that stuff. So that's what I would be thinking about. So the research that you've done becomes secondary, becomes supportive of your business model. And you're basically pitching us to raise the money, to give you the money to develop the app.
So would you recommend as like the initial recommendation that I do at the beginning of the,
Yeah.
like, as a quick pitch of the business model
Quick pitch of the business model with the potential economics.
and the potential economics?
Yeah.
Okay, so how long do you think I should be spending on, let's just say,
The research stuff.
the very beginning?
You should be able to give me a elevator pitch on the first slide right there. Based on our research, we're based on developmental behaviors and technology consumption research. We've come up with a application designed specifically for parents and for the kids. And this app will actually be able to regulate and to be able to grow with the child over time. We believe that we see the potential market of 45 million households. Of those 45 million households, we believe that we can convert 25 million of them. We can charge them, $10 a year, $1 a month for this app. That comes out to be $45 million or $450 million a year. And over a 10-year period, we're looking at $4.5 billion in revenue that we can generate. And if we use a EBITDA multiple of 10 on top of the 4.5 billion, we could be looking at a $45 billion company within the next 10 years. Did I get your attention?
Yeah.
Yeah.
So,
And then now you got my attention. Now you tell me the case.
okay. And after that, how long should I be spending on this data itself?
The data, you want to get specifically, you don't use data blocks, okay? You use bullet points. And you just pick the most powerful data points that's going to support your projections, your business model projections, your economics. It's going to tell us not only the market potential, but it's going to focus in on the product attributes that you're going to develop to get the adoption that you projected in the conversion rate, that you projected in the revenues, that you projected in the value of the company that you projected. So this is a great product. Is there a product like this out there?
Nothing as integrated into, let's just say, the software systems of the technology. So nothing that has the ability to limit what the child is seeing while providing an educational forum basically in the developmental stage. Nothing to that extent.
Your timing's good too, because
Frog, there is the Apple. They have these apps already made by Apple on their tablets because officially their tablets are more contoured towards children because of their huge display and easy interactiveness.
you might want to talk about the competition and what their product attributes are, and have like a table that basically shows your company, right, and then the other companies, and then the
Sort of
attributes,
like a checklist of
the
things that they
check
don't have, things
boxes.
that we do.
So you can show that your application basically checks off all of these boxes, where you can see the other applications aren't as inclusive as yours. Yours is more comprehensive. Yours is a better mousetrap than the others. The others only do certain things, but leave out some of these other things that are extremely important.
Should I also say, during this presentation, that we could use this very checklist as the first thing a customer would see when obviously blocking out, just listing out competitors versus us, this is what we're fulfilling?
Exactly, yeah. And if you know what the size of the market is from their side, and you know how much money they're generating, that could, and what their pricing model is, that could give you an idea of what your pricing model is. Okay? So keep the presentation short. Focus in on the key point, the economics. Use the research to basically build your case for the size of the market and for the product attributes. And then you need to convince us that you have the people around you and you can scale this thing very rapidly by using social media marketing techniques. And you could get to the 45 million, marketplace within maybe less than a year. So I'm going to give you $4.5 billion to do this. And you're going to be able to reach break even in probably 6 to 9 months.
Yeah.
Because,
Based on those projections?
yeah, because an app takes how long to download?
About 30 seconds, depending on their own connection.
Totally. okay? Is that helpful?
Yeah.
Okay. And all of you guys should be writing notes.
This was recorded, just asking.
It was, but I'm just telling you, all of you should be writing notes. Do you guys have photographic memories?
Yes.
Do you remember everything you see and hear?
Yes.
I know you do, but I'm not convinced that everybody else does.
Yo, you went home.
You guys need to be taking notes. Or you should be recording the conversations on your phone. You need to be recording all of your classes. And you need to be taking notes in all of your classes. Because I'm not convinced that you guys are doing that. And it's reflected in some of your performance. Okay, so who's going next? Oh, that's awesome, thank you. And could you turn off the, or collapse the Bloomberg, or just mute it?
You just double click, man. Or at the top, just Bloomberg TV, double click with 2 fingers.
Just click on it.
Just exit out now. Just exit.
Okay, or just close it out. There you go. So who hasn't presented yet? Okay, and who's going next? Okay, you guys are all going next.
It's just my question is there actual potential growth in that type of?
Yeah,
That'd
because
be
right now
interesting.
YouTube has, go up to YouTube and they talk about the children, because a lot of these companies were basically pushing content to kids
Yeah.
in a predatory fashion. So now there's a market for it,
Mm-hmm.
for this type of application, even more so now than ever. How many users use YouTube?
450 million, I think.
Yeah, so you partner with YouTube. And how many clients do you now have?
450 million.
Got it. You're not gonna get the 450 million, let's say you get a quarter of that. It's like 100 million.
Mm-hmm.
And let's say you only get half of that, that's 50 million. A month at $1. Or maybe it's even $1 a year. That's $50 million a year.
I would probably push off something like $1 for your first year, $1.99 for ever.
Yeah. Automatically paid out of your Apple account.
Mm-hmm.
So once you got them locked in, that's it.
Would I have to work with Apple directly in order
No,
to?
you set it up. You can add it so that people can pay through their Apple account automatically. So it's almost free. So you're generating enough revenue to pay for all your programming. And then once you got the channel set up and you got the adoption, you'll be able to push out other child protective and child development products.
And you would recommend that I stay away from trying to sell this product to Apple itself?
I wouldn't do that yet. I'd test the market first and see if you can get it adopted through social media on your own. And then once you show the market potential and the adoption, then you go to Apple or YouTube or whatever and say, look what I did. I've already tested the market. I already got 1 million adopters. And you don't even need that many. That's all you need is like 5,000 people to adopt it.
Within a certain amount of time.
Yeah. Okay, and action.
Hey guys, my name is Nico, and I will be presenting the usage of R programming in finance.
Will you click on the
Oh,
present?
yeah, and banking research.
Okay, and again, you're gonna need to go back and basically tell us how to use R programming to be able to build a product or a service that we can sell into the marketplace and give us the economics behind it,
Okay.
okay? And you wanna, just like I said earlier,
Yeah, yeah.
okay.
R programming for the future, it's kind of like it's for what it seems it's going to be like the main programming software in the future. So kind of what I want to tell you is R is going R is gonna be a program you can wanna adopt, because it'll be coming up and probably used by the majority of people. So introduction, R is a software made to run stats and output graphs, similar to SAS, SPSS, Stata, MATLAB. So it's a great financial application to apply. Even though Python could be a little more diverse, it's still a good program. And one of the good things about it is it's easy to use. It's similar to Excel, so it's easy to adopt if you know what Excel is. So some of the data, it's so far 10,000 data jobs have had R as the most popular program, and it's gone up 12% in 4 years in job postings on Indeed. So here's a graph showing the job postings. So as you can see, R has gone up from 4 to about 18% in jobs. They're looking for this specific program now. And as you can see in here, R is right here. So 10,000 jobs are asking for R, and as the most popular software. And that's just most popular. There's plenty of other jobs that are asking for it, but prefer other things, but they're still asking for R. So so in the graph, the significant variables are, this is R and this is SAS, and the year percentage of jobs change. So for the results, SAS was a former leader in data analysis, but now it looks like R is taking over, and it looks like they're going to continue with the momentum and stay as kind of the big programming software for finance. So that's it. Any questions, comments?
Based on the data, is this national or international?
International. It's a software that's used across the board.
So it's 10,000 jobs all over the world.
Well, that was in Indeed. That was on Indeed's stats. That was just Indeed. Professor, do you have anything you'd like to?
I'm gonna throw it back to you guys. Now that I've actually had the conversation, in the last presentation, I think you need to be thinking about the microeconomics around this presentation, and you should be asking questions. And don't raise your hand.
Just say it out.
In the business world, we don't raise our hand. In most cases, we just start firing questions at the individual.
Okay. Well, the differences between, I know Python's a little more flexible, but is there anything R has that stands out against, other than being really a lot easier?
I feel like kind of the jump towards R is something to know, because you always want to stay with like current technology trends, or you're gonna get left behind.
Gotcha.
So I feel like that's something to know, and also the ease of using it.
Yeah, you need to get rid of I feel. 'Cause I feel basically means that you're guessing. You need to state facts.
Okay.
Take us back to the comparison between R and Python.
Yeah, you should have an attributes chart,
Okay.
just like I was talking about earlier, that compares R, the R product,
So like
the
Python.
attributes with the checkboxes,
Okay.
Python and SAS.
Okay.
Okay.
Or like customer
And
satisfaction.
the most important thing about R is what?
Oh, that's good.
What's the most important thing about R that basically drives its adoption? What's the most?
It's being used a lot,
Okay, but why?
because it's easy to use.
What else?
Um,
What's the significant difference between SAS and R? What's the most significant difference between the two? And SPSS and Stata and MATLAB. What makes R's adoption faster? What is causing R's adoption cycle to be exponential? Because it was exponential, right, in that graph?
um,
Yeah. What's happening to SAS?
it's being left behind.
Yeah, it's in the laggard phase,
Yeah.
right? And R is in the
Rising.
early adoption
Early
phase.
adoption.
Got it? Why? What's the number one reason, other than ease, that is causing R to be adopted faster? What's the number one reason, other than ease?
I'd say because, well, I'd say because it's simple, but that's pretty similar.
No, controlling for simple.
Because data jobs are picking
No,
up.
what's the difference between the two products?
And
If I was gonna pick the two products, SAS or SPSS or Stata or MATLAB or R, and they both do exactly the same thing, why would I pick R?
because there's a lot you can do with it. And because
Other than
it's
that,
simple.
other than that,
Um,
I can do a lot with SPSS and
Yeah.
MATLAB and stuff.
Just because it's coming in the it's gonna be the future's.
No,
main
but
program.
why is it adopting quicker?
I'm not too sure.
Is it easier to
No, controlling for ease of use. Why are people adopting R faster than the other products?
Because similarities with
Nope.
Excel.
Nope, controlling for the attributes. There's one thing that makes it different. What?
I just really want to know.
What's the difference between R and SAS? If I'm looking at R and I'm looking at SAS, and they both do the exact same thing, why do I pick R?
More people are jumping on it.
Yep.
Yeah.
I'm not too
There's
sure.
one product, there's a product attribute of R that is different than SAS. If I wanted to use SAS, what do I have to do?
You have to download.
Yeah. Okay, how do I download it? What do I have to do first?
You have to get a subscription,
Yeah, and then,
and then you have to pay for it.
thank you,
And ours is free.
Open source.
Open. Yes.
isn't it?
Yes,
Okay,
that's it.
and that's the one thing you didn't say right off the bat,
Yeah.
which is the number one factor, product attribute, that differentiates between the two.
Yeah, you're right.
Okay, so the question now becomes, how do we make money?
Mhm.
Yeah, you basically just laid out an argument for R over SAS, but you didn't tell us how we were gonna make money off of it.
Well, I mean, you would save money. if
Yeah,
you
but
use
that's
R,
not what,
but that's-
people don't care
Yeah.
about saving money, they care about making money. Cause there's a limit to the amount of money I can save.
Mhm.
If we figure out the right business model, then there's unlimited amount of money we can make. So what do you wanna do, save money or make money? Make
Yeah.
money, so tell us how to make money off of this.
So you could use R to make different financial plans for.
You need to be specific.
Like a
This
specific-
just becomes an academic exercise that is great for maybe, academicians,
Mhm.
but I don't know, are you guys academicians or are you business people?
Business.
Business guys,
Mhm.
okay? So how can we commercialize this?
You could use it as your.
Could?
You will use it as your software.
Okay, can you give us examples? How do we make money off this?
So you could use it as your main source to make graphs and different analysis.
I can do that in other applications.
Yes.
Isn't the way to make money off of this? Go ahead. Use it.
I know we're not supposed to raise hands, but
No, just say-
you're able to share code a lot easier since people will have R. So it's more of like a GitHub, since people will be able to share software to improve.
Okay, how do
Structures.
we make money off of it? This company here, how do we make money?
Well,
This is just
Until you
reducing
can tell
costs,
me
right?
how we're gonna
Yeah.
make money, you're wasting our time.
Okay.
I mean, I'm not being
Yeah.
hard on you or
No, I
anything
know.
like that.
I get it.
I'm just being honest,
Mhm.
okay? So once you've worked, again, I'm kinda training you,
Yeah.
so you can go have these conversations down the street. Because those people right there are probably the top people in the United States, by education and by profession,
Yeah.
other than in New York or maybe even in London, or maybe not Hong Kong anymore, but, you know, those hubs, you know, innovation.
Yeah,
So this is just a tool to innovation,
yeah.
right?
Yeah,
So the question then becomes, really, go back to that other slide. Go back to the slide, that one.
it-
How do we piggyback off that,
Yeah.
that adoption cycle right there?
mhm.
And you only have 10,000 jobs,
Yeah, this isn't.
right? That's just the sampling.
Mhm,
You need to tell me what the total market is.
mhm.
How many, of all the jobs, how many people are using this? Can we go to our website and find the number of users? The number of people that are actually using R? Is that available? Do you think I could find that information? And then from those people who actually use R, can I market to them?
Technically, yes.
Yeah.
Yeah, can I market our products and services to them?
Yeah.
Are we marketing to them R?
No.
No.
Not from this.
So we gotta
You can't
figure
do
out
with
what
R.
we're gonna market to these R users.
Like an update.
Well, there's a bunch of libraries, right, that are already for free.
Maybe some interactiveness, like for group work.
The question is, how can you get the R users to pay you something?
Cybersecurity.
Offering them some sort of.
Oh, like security.
Yeah,
security, yeah, is
cybersecurity.
what I was gonna
You
say.
could do that.
Yeah, cybersecurity.
Yeah, unfortunately, you can't advertise on the R website,
Yeah.
right? You don't have access to the
So
members.
we'd have to reach
How
out
would you
directly to
go about?
companies that
You
are.
probably have to use social media marketing techniques to be able to try to target people with attributes that have a high probability of R usage. So what you could do is you could do a survey of maybe 20 or 50 or 100 R users and figure out their economic, demographic, socioeconomic attributes. And then target marketing through social media campaigns to those people who fit those socio-demographic, socioeconomic attributes. You know, through Twitter or Facebook or whatever.
Yeah.
To then try to get their interest, to get them to buy whatever it is that you have to offer, whatever it is of value. So you have to figure out what your value proposition is.
And then for our you said it was more for finance, right? So you
No,
can
it's
use-
everything.
Well, it
Oh,
could be
oh.
used for everything, yeah.
Oh, okay.
But
Well,
I
I
mean,
know it could be used for
Yeah.
everything, but you said a lot was used in finance, right?
Like
Yeah.
specifically like making graphs and data analysis.
Could you use R as an engine to be able to do standardized calculations, to provide some type of information or value through some kind of application
Yeah.
via your phone?
Mhm.
You know, it could be finance oriented, could be marketing, could be child, you know, who knows, maybe you guys partner and you provide the, basically the R engine, you know, behind the child, you know, child app, right? Because you're gonna need to be able to crunch all the demographic information,
Yeah.
right? To then be able to sell back new products and services through targeted marketing campaigns. So R could be the engine. So you're gonna pay him a piece of your revenue to get him to be able to conduct marketing research, for you to be able to update your application in real time so that you can generate more revenue by introducing new products or attributes to your application, to your product. That could be one. And if you can do it for him, you could do it for others.
Yeah. It'd be like a service.
Yeah, yeah. So you could be the service provider to be able to provide our engines, you know, for startup companies
Yeah.
that don't have that capability currently.
This is just a coding language, right?
Yeah,
Yeah.
So you don't sell it to consumers, you just sell it to whatever,
there's no
Business.
sales.
or, well, you're
It's not
asking
even
how to
selling.
make money, right?
Well, you can't make money off R.
Well, yeah, you can.
I mean, you can't make money selling R because it's open source, it's free.
It's free.
What's-
You can make money by selling to our users, or you can make money by basically deploying R, either at the, providing R engines that do something, using R as the,
sell it.
as the engine
If you
that creates some kind of value
that'll make like
of something that then you can sell either to individuals
you could
as
sell,
an app,
code
or
to
sell
somebody
it
else and they can use
to an enterprise,
You know what I mean?
startup
That's what they're
companies
talking about.
or larger enterprises. Like you were gonna probably be targeting, what, YouTube and Google and Apple and, you know,
And
those
their
types of
products,
companies. So think about it.
Alright, yeah.
Okay, and then come back and do another, maybe another 5-minute, you know, on next week.
Okay.
You know, your presentation should be shorter,
Mhm.
more pointed, shall we say? And then your evidence is gonna be backed, your business model value proposition is gonna be backed by your report,
Okay.
and then your PowerPoint presentation.
Mhm.
So think about it.
Alright.
And first thing I would do is, how are others creating value propositions and business models around R? What are others doing?
Okay.
And then figure out who's doing it the best way. What, you know, other companies are doing it the best way, and replicate their business model, the best of their business models, and then find a value proposition or a series of value propositions that you can basically sell us, so that we can give you the money to basically build out this product
Okay.
and service. Okay, next. How much time do we have?
It is
13.
Okay, next. 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 I'm just gonna keep saying next until somebody stands up. That hasn't stood up yet.
Yeah, just take me off.
Yeah.
Next. I don't care if you're not ready, you gotta get up there.
It's better
I don't
to
care.
Yeah.
You gotta get up there. You can't just sit there. Do not sit in your seat. You need to jump out of your seat, and you need to get up in front of the class.
You just go for it if you want. You just explain it.
You can get away with this stuff, again, you know, in the academy, you can get away with just sitting around and doing nothing and waiting for the professor or somebody else to do something. In the business world, you get an opportunity to get up in front of somebody, you jump up and get in front of people,
I'll go after.
even if you're ready or you're not. Because there's no such thing as failure in the business world. It's just a lack of perseverance and self-efficacy and self-confidence. We don't look at things as failures. It's just a lack of information and practice and perseverance. It's the same thing in sports, right?
Yep.
If you play sports, are you gonna say, no, I'm just gonna sit back here and watch you guys play, and then I'll get up and play? Is that how you do it? No, you get up and play, and you make mistakes, and you learn from your mistakes, and you become a really good player. You can't become a good player by sitting there. So in business, you can't become a good business person by sitting in your seat. You become a good business person by getting up in front of everybody and giving it a try. Okay, so go ahead.
Okay. So I did my article reviews on cryptocurrency and the intrinsic value in them. So cryptocurrency is a digital asset you can buy online. It's relatively new at the start of the 2000s, when the internet and computers have been advanced.
Okay, hold on.
Yes.
Okay, let me give you guys some coaching. Okay, you were doing really great, okay? But you gotta give me the value proposition right after that.
Okay.
Okay, so we did our research on cryptocurrencies. We believe that we can make money by doing the following things. 1, 2, 3. Now let me tell you about cryptocurrencies and how we're gonna make money. Is that interesting?
Yeah, so.
Totally. Now you got me hooked. Okay. Now I'm listening to you. You got my attention. Now walk me through cryptocurrencies and how we're going to make money.
Okay.
So
Well,
try it again.
Alright. So,
We did our research on cryptocurrencies.
we did our research on cryptocurrencies, and here are a number of ways we can make money off asset, but in the long term, if a financial institution decided to adopt any coins or a country's currency falls and they adopt a certain cryptocurrency, there is a lot of potential of increasing the price, and this is how we can make our profits.
Now tell us about cryptocurrencies and what the market opportunities are.
So currently, the market opportunities are,
First, tell us what cryptocurrencies are, because we don't know. You're pitching it to us, and we've heard about it, but we're not really, we really don't understand the product
okay,
and what the value is of.
cryptocurrencies is a digital asset you can buy online. Some examples are Bitcoin, Ripple, and you can use these as transactions from consumer to consumer, or business to consumer. And one of the biggest potential is if a country adopts Bitcoin as their national currency. That is the most realistic way in the long run that we'll see we can make money off of this. Unless you want me to give you conspiracy theories, and that's another way. But realistically,
Okay, this is how I would do it. We did our market research on cryptocurrencies. We believe we can make money the following ways by using cryptocurrencies. We believe that we can trade cryptocurrencies, not only domestically but also nationally. We believe that we can also build portfolios of cryptocurrencies and basically sell those portfolio strategies to investors. We also believe that we can trade derivative contracts and trade the cryptocurrencies based on our research to be able to profit from the volatility in cryptocurrency values. And we also believe that we can make money by making recommendations to individuals and institutions, not only on how to hedge their cryptocurrency exposures, but also how to use cryptocurrencies to hedge foreign currency risk. Let me step back a little bit and tell you a little bit about cryptocurrencies. Cryptocurrencies have only been around for basically 10 years. The most dominant cryptocurrency is Bitcoin. But there's also Ethereum, and there's other cryptocurrencies that have come out over the last 3 to 5 years. Cryptocurrencies is a distributed ledger system, which basically is an open system where anybody can mine a cryptocurrency if they have enough computing power to be able to do it. And there's enough hash rates out there to be able to mine the cryptos to get the cryptocurrencies. Once you get a cryptocurrency, you can also use the cryptocurrency as a medium of exchange. Currently, Bitcoin, which has the largest market cap, could be used in an exchange for goods and services. And Bitcoin was used originally in the dark web for basically to go around regulation and go around basically law enforcement. But that accelerated the adoption of Bitcoin. Bitcoin is currently trading at about, what is it, $3,000? $8,000. It peaked at $10,000 over the last probably 24 months to 3 years. It's come down significantly, but it looks like it's reached a support, and its current intrinsic value is around $8,000. And we believe that Bitcoin's value, intrinsic value, will go up over the next 3 to 5 years as it becomes adopted more as a medium of exchange. Based on our research, we've identified 5 factors that drive the intrinsic value of cryptocurrencies. First is the rate of adoption, the market cap. Currently, Bitcoin's market cap is blah, blah, blah. Currently, the number of hash rates or hash for Bitcoin is Y. There are other currencies that are highly correlated to the Bitcoin valuation. Bitcoin is not a foreign currency, it is a virtual currency. So it doesn't have all the attributes that foreign currencies have, but it is, can be used as a medium of exchange. We believe that digital currencies will be a dominant asset class and will capture a significant portion of the clearing of transactions over the next 5 to 10 years. We believe that we can make money not only trading cryptocurrencies, but also trading derivative contracts on these cryptocurrency indexes. We believe that we can make money on designing portfolios of cryptocurrencies and selling those portfolio strategies to investors, both retail and institutional. And we also believe that we can develop risk management strategies around those cryptocurrency portfolios to not only hedge off cryptocurrency risk, but also to diversify foreign currency portfolios and to hedge off foreign currency risk. Did you record that?
You got it.
Okay. You want to record these conversations so you also have them on your phone. So basically, I just laid out the business model for you. So if we can raise $2 billion in assets under management over the next 3 to 5 years, and we charge 1% in asset management fees, we can generate $20 million a year in gross fee revenue. And if we can generate $20 million a year for 10 years, that's basically $2 billion that the company can generate. And if we slap a 10 multiple on the $2 billion, our enterprise value of the company could be $20 billion in the next 10 years. Do you have my interest now? Are you interested?
Yes.
Yep. Okay. How much time do we have?
2 minutes.
Okay. So who can do a 2-minute pitch? Lauren? Oh, Dan, you got it.
Yeah.
2 minutes
2
from
minutes.
there. Just stand up and do it.
You got this,
Oh,
bro.
from here?
I see
You can do it.
All right.
2 minutes. No, now you got to do it in front because
In front of the camera, right?
yeah, because nobody's turning around. Okay, give us your 2-minute pitch.
All right. Well, I was doing my marketing research on foreign investment and how business ethics is affecting that. And so now that we are going on a global scale in this world, so will our businesses. And I'm doing my marketing research on our social responsibility to doing business in less developed countries, and also not only but not exploiting those resources, but actually using it to help the country there. And so first I started off with my research.
And again, change my and I to we.
So we did our research in business ethics in Southeast Asia, and Asia is known for not really preaching business ethics as well as other countries in the Western Hemisphere. And because of that, we have changed a lot of our investments through Japan and China, and are slowly creeping into Southeast Asia as well. Because of their government structures being different, we are having to change the way we approach the investment, and if we invest properly, there could be a lot of potential for manufacturing and being able to control inflation in a proper way. That's really
Okay, this is what I would do
okay.
in 30 seconds. What we're studying is business ethics in Southeast Asia.
Yeah, that was my
What
main.
we've been able to, the market opportunity that we've identified is to be able to identify firms in Southeast Asia to invest in that deploy business ethical behavior. Because what we found, based off of our stock selection methodology that we've developed, is that companies that deploy business ethics effectively actually trade at a premium to other companies within their sectors, and their stock prices appreciate at a faster rate over the investment time period. So we're going to use this business ethics stock selection methodology to be able to pick stocks in the Southeast Asian markets to invest in. And we're going to build a portfolio out of those stocks. And we are going to market an exchange-traded fund and exchange-traded funds as environmental and social responsibility funds. And we believe that we can raise and invest $2 billion within the next 3 to 5 years in these companies. And if we charge a 1% assets under management fee, we can generate $20 million a year. And over the next 10 years, we can generate $200 million in asset management fees. And if I slap a 10 multiple on top of that $200 million, we believe that our company will be worth $2 billion in less than 10 years.
Perfect.
Yeah, it is
That makes
perfect.
He said, yeah, it is perfect.
It is, because
It is,
I've done it.
No, it is.
Right?
Wait,
How
what?
many times did I do it today?
About 3 or 4.
Yeah, so you see the methodology.